Thank you for joining us now on Business Now. I am Franco Malape. Nigeria's foreign portfolio equity recorded a $2.08 billion shortfall between 2010 and 2021 amid an unfavorable economic environment characterized by forex challenges and loss of investors' confidence. According to World Bank's International Debt Report 2022, the portfolio equity had recorded $2.15 billion in the year 2010, but reduced to $72 million by 2021. The country's equity portfolio recorded a deficit of $1.55 billion in 2019 against $1.26 billion in the preceding year. Nigeria has recorded a similar deficit in 2020 with $255 million in portfolio equity, according to Washington Bank report. Commenting on the nation's depleting portfolio equity, a capital market analyst Ayotunde Alabi said this was because the nation's business environment was unattractive and the inability of investors to repatriate dividends. Away from there now, following the need to finance the 2022 budget deficit, the federal government, through the Debt Management Office in 2022, raised a whopping sum of 3.06 trillion naira from the bond market, the Debt Office monthly auction result have revealed. Analysis of the auction results show that total bond borrowing in 2020 is 13% higher than 2.71 trillion naira borrowed last year. The federal government's 2022 budget stood at 17.32 trillion naira with a deficit of 7.35 trillion naira, which gives room for a new borrowing of 6.1 trillion naira. The monthly auction result revealed that DMO had offered to raise 2.48 trillion naira in the bond market, but eventually raised 4.65 trillion naira, which is over 53.22% oversubscription. Report gathered that the federal government of Nigeria bonds in the first half of 2022 recorded a 37% oversubscription to 3.02 trillion naira, when 1.13 trillion naira was amount offered by the DMO. However, in the second half of the year, the DMO allocated 1.2 trillion naira to investors when it seeks to raise 1.35 trillion naira. The total amount of subscriptions was 1.63 trillion naira in the second half of 2022. And in the meantime, the Nigerian government recorded an overall deficit of 6.23 trillion naira in half year 2022 due to revenue shortfall. This was disclosed by the Central Bank of Nigeria in its recently published Financial Stability Report for June 2022. Speaking on Business Breakfast earlier in the day, analyst Sumbo Badijoko blamed the revenue shortfall on insincerity on the part of revenue-generating agency and government's slow response to the nation's revenue-generating crisis.
The NNPC is not remitting much. In the past 4 months or thereabout, they've not remitted a dime into the federation accounts. And when you look at that, it's part of what they expect to use as part of the budget, so which is quite unfortunate. And in terms of the other collection agency, in the past, the Customs Service used to do well, but of recent, we are not really knowing what they are actually doing because their remittance is reducing. As well as the FIRS, they're having issues getting a lot of people into the tax net as they propose to have. This are a combination of what is bringing about the reduction in the revenue. And without an improvement in revenue, it's going to be difficult for the budget to be funded, especially ahead of 2023. The budgets for the executive, for the legislative, still increasing by the day. Meanwhile, we expect this to reduce in terms of cutting costs of governance. There are so many people who are holding offices that we can do without because they all draw salaries from the federation account and from the budget. And of course, you find a situation where the inflation rate is also increasing, which is affecting the common man. And when they hear the humongous amounts that the executive budget is going to take, it's really giving a cause for concern. If cost of governance is reduced, that will give them the avenue to save more money, to be able to reduce the borrowing that they have been embarking upon. And that is exactly what I mean. And of course, you find a situation where maybe in terms of procurement, rather than coming for local alternative, they will still want to import. And importation, frequent importation is not something that is favorable for the economy, let alone our revenue drive, because it's killing the local industries. And these are some things that I mean. These are what I mean by insincerity on part of the government.
And away from there now, foreign trade reports of the National Bureau of Statistics have shown that manufacturers spent 1.88 trillion on raw materials imported in 9 months. The first to third quarter foreign trade report indicated that manufacturers imported raw materials worth 1.88 billion naira between January and September 2022. A 22.36% decline from the 2.43 billion naira they spent in the corresponding period in the previous year. The dip was on the back of forex scarcity in the country, which has made many firms source the raw materials locally, and those who could not get their input in the country had to stop production. Some manufacturers have lamented the difficulty in accessing foreign exchange at the parallel market due to central banks' refusal to allocate forex to bureau, the Sean operators. The chief executive officer of the Coleman Technical Industries, George Onafowokon, said the weakness of the naira, particularly in the parallel market, where a majority of manufacturers source foreign exchange, has greatly disrupted production activities. Onafowokon expressed optimism that the price hikes which followed the naira devaluation will fizzle out if the currency maintained its current momentum. Nigeria's crude oil earnings rose by about 308.6 billion within 2 months following the recent increase in the country's oil output due to concerted efforts by the Nigerian National Petroleum Company Limited and security agencies to halt oil theft. Data accessed from the Nigerian Upstream Petroleum Regulatory Commission and other international agencies the weekend shows that the country's oil earnings moved up between September and November this year. Figures from the NUPLC show that while Nigeria pumped 937,766 barrels of crude in September, its output moved up to 1.01 million barrels per day in October. This represents an increase of 76,900 or 719 barrels per day, which translates to a total of 2.37 million barrels for the month of October. The increase in oil production continued in November as Nigeria produced 1.18 million barrels per day in that month, indicating a daily increase of 171,119 barrels in the month. This implies that the country's crude oil output appreciated by 5,000 or 5.133 million barrels during the review month. And now the federal governments of Nigeria and US-based renewable energy company Sun Africa have signed an agreement for the engineering, procurement and construction of 5,000 megawatts of solar generation and 2,500 megawatts per hour of battery energy storage power plant. The power plants will be situated across the country's 6 geopolitical zones and will help provide clean and affordable electricity to over 30 million people. A statement released by the federal government through its official Twitter account noted that the agreement was signed during the US-Africa Business Forum held recently. The federal government said the project, which will be funded with a $10 billion investment from the United States government.